right? So, when I'm on the show or even meeting people at offline events, they all ask me about, what is next? What should we be looking at? What are the key opportunities? And so that's why for today, it's all about, covering a particular industry and zooming really into the Chinese future. And that's why we've got our experts to really go into key analysis that you need to know. So from UOB Asset Management and Moomoo Singapore, we've got Colin Ng, Executive Director, Head of Asia Equities from UOB Asset Management. We've got Edward Pai, Vice President of Intermediary Sales. And of course, Lee Yong-Shern, Senior Manager of Corporate and Institutional Sales from Moomoo Singapore. Welcome, Colin, Edward, and Yong-Shern.
Thanks for having me. Thanks.
Hi. Welcome to the show. How are you doing today?
Thank you. Thanks, Olivia. We're good.
I'm so glad to have, three gentlemen on the show today. And I'm sure that we're going to have some exciting discussions because we've already got questions coming in. So, really, just to set the tone before we go into the fireside chat, what can they expect from today's live webinar?
Right, Olivia, I think always expect to learn something new, and also I'm going to show you a platform. Feel free if you have anything you want to know more about Moomoo or promotions or events, feel free to let us know because I'm going to show you through the screen sharing later.
Thank you, Yong-Shern. Now, Colin and Edward, what do you think about today? And maybe you can just set the context of why it's important, this topic of the future of China.
Colin, you want to go?
Yeah. We're going to talk about China and also the development in China. But more importantly, like you earlier highlighted, the ChiNext ETF will probably provide the future of China innovation and innovative businesses. And we thought that, by introducing this index to, people in Singapore, we will probably provide this opportunity to our domestic investors as, ChiNext is viewed as the China equivalent of the US NASDAQ.
Mm-hmm.
Yeah, I think today we want clients to have a takeaway, what are the long-term structural opportunities in China, how they can actually, via our ETF, actually take that chance and be participating in the long-term structural opportunities. And of course, from there, gaining their investments as well in terms of both diversification and as well as also on the exposure. Yeah.
Perfect. Thanks for setting the context. Now, Yong-Shern, we'll be back with you shortly towards the second half of the webinar live. We'll see you soon.
See you.
So, gentlemen, I would like to know, could you just give us or provide us with an overview of both the ChiNext Index and also maybe the overall market at the moment?
Yeah, great. I think maybe I can actually give an overview of what is the ChiNext market. Probably, I think we are seeing the slides as well. So maybe I'll just introduce what is basically the ChiNext market on the second slide as well. And when we move on to the next, I just want to kind of touch on what is I think many of you guys are here familiar with the China offshore stock market structure, but probably we want to give a brief introduction onto the China onshore stock market structure. So this is the onshore stock market structure. So you have this Shenzhen Stock Exchange, you have the Shanghai Stock Exchange, and the recent addition of the Beijing Stock Exchange. So I think the Chinese equities are basically available in both onshore and offshore. I've mentioned, right? There are several share classes to choose from. While there's some restriction on the type of securities that investor can pick, I think Chinese authorities are also continually making improvements to the market structure, increasing access and liquidity as well. So the Chinese mainland listings are either on the, if we look at it, it's either on the Shenzhen Stock Exchange or if not on the Shanghai Stock Exchange. They were actually launched in 1990 as a way of modernizing and expanding the economy. So for Shanghai Stock Exchange, is basically located in the China's financial capital and tends to include larger and more industrial and often formerly state-run companies. And for Shenzhen Stock Exchange, it's actually based in one of the most modern cities in China. It tends to include smaller and emerging sector companies, and the bulk of the investors both includes individuals as well as institutionals as well. So both exchange definitely have scale. The Shanghai Stock Exchange is the 4th largest in the world by market cap, and Shenzhen is actually the 8th. So one thing is that if you can see, Shanghai and Shenzhen operates a multi-board system designed to group, companies by similar features and apply different listing rules to facilitate, of course, better capital allocation by investors. Shanghai run the main board, which has the requirement around government approval and pricing. There's a more growth-oriented one, which is the Science and Tech Innovation Board, which is basically the star market. And of course, Shenzhen, similar multi-board system. They have the main board and another board, which is the ChiNext market. So today we're talking about the ChiNext Index. Probably let's zoom into the ChiNext market. In the next slide itself, like what Colin has said, is a Nasdaq style board. The ChiNext market is inaugurated in Shenzhen on the 23rd of October 2009. When they started out, it was just 28 firms and a market cap of approximately 11 billion in renminbi. Now, the ChiNext market serves as an important platform, in China's capital market for innovative and fast-growing enterprises to basically raise funds with less stringent listing criteria compared to the main board. But when you look at today, there are over 1,100 companies that are listed on the ChiNext market with a total market cap of more than 10 trillion renminbi, and the underlying companies operate in diverse range of traditional and new economy sectors. So you can see the tremendous growth that we've seen in the ChiNext market. So moving on, what is ChiNext Index? Basically, very straightforward. It's the benchmark and flagship index of the ChiNext market. Comprises of the 100 largest and most liquid A-share listed on the ChiNext market itself. So you have a wide universe of stocks, over 1,000. You have a diversification benefit. The index constituents is top 100 companies. You have growth opportunities. So some of the names that you see in the index actually provide exposure to the China market leaders as well. And of course, the index actually rebalance on a semi-annual basis. Now, I will just go through on the next slide. And the ChiNext Index methodology is really straightforward, very simple. So when selecting constituent stocks for the ChiNext Index, I think the index provider, they basically calculate the daily average total market cap as well as the daily average trading value during the previous 6 months for all the stocks in the stocks universe. And after that, they rank the stocks in the stock universe in descending order according to the daily average trading value. And of course, they exclude the bottom top 10%. And then and if they have any similar ranking stocks with strong industry representative and good financial performance are basically preferred. So really straightforward. And when we look at the next slide, in terms of the sectorial breakdown, you can see that the heavyweights are basically in your industry, healthcare, and information technology. But it is also diversified across your financial, your material, and the likes of the consumer staple, and so on and so forth. So I think some of the companies included inside the index are like your advanced industrial, like your iron lithium battery manufacturer, you have the healthcare technology, consumer staple, mainly on the agri commodity and also on the food products processor. So I think that is a nutshell for what the China onshore equity market is, what is the structure, the ChiNext market, and basically the ChiNext Index as well. Yeah.
Mm-hmm. Well, thanks for outlining that, because I think there were a lot of questions about what it actually, has and what it actually is in terms of definition. So that's great to set the tone. But I think just to take it a step further, we've heard much about the 20th Party Congress last week. So, you've got this ever increasing geopolitical tensions between China, US, constantly being talked about. And then you've got the COVID lockdowns, and then you've got, the China property issue. So we've got all these issues that are surrounding, and, we don't know if they're here to stay. So, what is UOB AM's view on all this? And, how will this affect the China equity markets? And because it's a lot of issues, let's try to focus on just the macro environment and implications.
Sure. Well, if you look at China, basically, the relations between US and China has been tough going You know, it's actually started since the trade war that we have back in 2018. And then since then, even we have this engagement between US and China. No, they're still trading with each country. And since then, actually, even after 3 years of trade war, I'm actually very surprised to see that trade between US and China continues to grow, you know, and that is the kind of intertwined relationship between the largest economy and the second largest economy, which is China. However, if you look at the slide, what we saw this year, somewhat, basically, US has identified China as its main rivalry. So therefore, we have seen this, on the slide, this thing about the US Chip Act, the US Chip 4 Alliance, and basically this is all out US sanction on advanced chips and semiconductor equipment selling to China. So basically, US just wants to isolate China away from this technology supply chain. And this is important because this is the way US thinking is to suppress the progress of China. And because of this, China basically has to achieve self-reliance at every level of the technology supply chain. Put it that way, even US themselves, they are not able to do everything at their own, because in the globalized world that we have over the last 20 years, for example, TSMC or Samsung, they are TSMC is good in fabricating the chips, for example. Samsung is good in making DRAMs, and you have a Dutch company called ASML, which is just specialized in doing lithography. So all this, even themselves, US themselves, is actually going to be very difficult for them to do it on their own. But however, because of all these various actions that the US has basically acted on, it actually means that China. It basically means that China has to face a very difficult, a challenging task ahead, and require tremendous hard work in the next 2 to 3 to 5 years. I would say that in all aspects, China has the talent, the love of scientists, engineers, and they also have the financial support of the Chinese government to meet this challenge. So, at the end of the day, you also need a lot of funding for R&D, for example, and that's where the Chinese government will come in to support this initiative. But the key here is that I think for the public is that when we talk about advanced technology, we're talking about 5 nanometer and above. So meaning that 5 nanometer, and they are going to 3 nanometer by TSMC right now. And by the way, China is at 7 nanometer. So i.e. is that they are not that far behind in terms of the technology development. So, when we're talking about TSMC, they are actually able to do mass production right now for commercial production for 7 nanometer. So I would deem that this is not too far behind, but because of their progress, US basically felt that this is a time to act. If you look at the next slide, I think, I know it's a lot of questions, a lot of issues that China face, but put it that way, going to this year, there are so many issues that other countries are facing as well. I mean, Europe are facing with an energy crisis that will basically, hit their economy, over the coming 2 to 3 quarters. US as well as Europe are also facing very high inflation. By the way, China inflation is just at 2.5%, the last one recorded. If you look at it, is that I think also at the back of a lot of investors' mind is that, will China use military force against Taiwan in the near term? And I'm sure everyone has heard that during the National Party Congress meeting, NPC meeting last week, is that, they are still working towards a peaceful unification with Taiwan. And as such, unless, Taiwan go for or proclaim independence or declare independence, then unless that happens. Otherwise, I think the progress, the pursuit of the Chinese government is for one of a peaceful unification. We also, I think, over the MPC meeting last week as well, is that I think that a lot of expectation is on the COVID. I think we talk about COVID as well. The key here is that China will need scientific evidence in order to change their zero COVID strategy. And of course, for markets is that, this zero COVID strategy has actually provided a lot of uncertainty for the market, because I don't know when, Shanghai will be locked down again. I don't know when, Shenzhen will face another lockdown. So, and unfortunately, over the meeting last week is that we didn't hear any of this, message by President Xi. But my thinking, our thinking is that, China understand that this zero COVID situation basically provide a lot of stress to the economy as well. But the point here is that even with lockdowns that we saw in the second quarter, I think we saw that the last GDP numbers was at 3.9%. And for the full year, we are still talking about 3%. And at 3% growth for China, it's still better growth than what we see in US or Europe. So in that sense, I think the Chinese government, will still want to, maintain their zero COVID strategy to save life. And when they will turn the decision is when they receive scientific evidence, possibly backed by the WHO, to say that the current pandemic is no longer at risk because the fatality rate of the current variant could be a lot lower. Of course, here is that, as I also mentioned, the growth trajectory, the technology innovation now face a bit of challenges because of the US interference in the semiconductor supply chain. And by US trying to halt some of these chips, advanced chip. Recently they also, like, for example, NVIDIA and AMD were not able to provide their advanced chip to China. That basically will have certain impact in terms of their progress, towards, for example, AI applications, or going to far advanced technology in 5G or 6G technology. But as what our host have highlighted earlier in her opening statement, is that China is the second largest economy in the world. In fact, it is the significant trading partner for many nations. In terms of being able to export, their goods, they are certainly the largest exporter of goods, finished goods, because China can do it with scale, and at cost efficiency. So this cost competitiveness has made China, being the top exporter of goods right now. And you look at China, is that it is also the largest middle income consumer market in the world. Estimated with 700 million population, in the middle income segment. The key here is that every Western MNCs wants to have a pie of this growing consumer business. So again, here is that China is able to also import a lot of goods because of their domestic consumption. Just to give you an example, is that, for example, if you look at the overall car sales in US, we are talking about what, 16, 17 million? And in China, it's already 26 million. And that's why, China has a certain strength. And of course, if China is able, to hit this milestone in terms of technology development, i.e. by able to achieve at least 5 nanometer in terms of advanced technology, then basically, China will basically able to self-rely and fulfill their needs for this consumer market. And unfortunately, if that happens, the West will completely lose this sizable consumer market of 1.4 billion population.
Well, thank you, Colin, for that. I mean, it is, a lot of issues, and, thank you for dissecting that and really putting that entire picture for us together. Now, it's not just, about what's going on in the Chinese equity markets right now, but, despite everything that's going on, we're always looking at opportunities, right? So what do you think are the main growth drivers for China? And let's look at the next decade as the time horizon.
Yeah, thanks. I think that's a good transition to what Colin has actually mentioned now, right? So I think your main growth drivers are basically the structural opportunities as well in the slide. So when we move on, I think one of the things that we will need to actually kind of mention is that in the next slide, where I'm showing the China's 14 5-year plan, I think the long-term structural outlook for China innovation sectors is in line with the long-term structural opportunities in China. So there are two parts of the long-term structural opportunity, and how these parts are interconnected to, each other is integral in identifying this opportunity. Firstly, for China to realize its, 2035 growth ambitions is paramount for China in pursuing, towards boosting productivity and innovation, just like what Colin has actually mentioned. And the Chinese economy is currently in a growth transition where consumption increases as a share of the economy. Now, the Chinese policymakers have actually called this strategy a dual circulation and put forward in May 2020. Now, this economic policy plays a great importance to tap the potential of this huge domestic market and rely on indigenous innovation to fuel growth. Of course, in some way reducing China's dependence on the foreign markets while still supported by the export growth and expansion in the international markets as well. And as also Colin had mentioned, with China's middle class expected to double from, the current 400 to 800 million in people in 2035, I think China's potential for rising consumption is definitely substantial. But however, for consumption to grow, right, productivity is needed to drive sustained income growth. The government has actually relied on technology, and scientific discovery to play a key role in solving of many of society problems. And the Chinese economy is gradually, moving up the value chain by pivoting towards both advanced manufacturing and tech. And of course, secondly, the China 14th 5-year plan also envisaged that the development on the sustainability of growth and quality of life of its citizens, which also contribute to the 2035 modernization goal. So you have your technological innovation, green energy, your people well-being continue to be the utmost importance to the Chinese government. And of course, certain sectors are definitely poised to benefit from the policy tailwinds, like the likes of your renewable energy, AI, industry IoT, your 5-6G infrastructure. So I think one thing is that in the next slide, I just want to kind of show in terms of the structural opportunity, one key area that China is really leading on is also on the innovation. When you look at it, you can see that the economy, the on the left table as well, when we look at into the economies of 3 or more top 100 science and technology cluster, when we say what is science and technology cluster, right? Basically, that is the geographical area around the world with highest density of inventors, innovators, and scientific authors. They are on par with the United States. They have 21 number of top 100 clusters. And when we look into the Global Innovation Index itself, in the upper middle income economies, China is actually leading. So they have been actually at the forefront of the innovation, establishing itself as an innovation leader. So, and when you look at the next slide, where we look at the total innovation patents files, remarkably is actually even higher than United States. And when we look at the 2019 to 2021 number, if we look into that comparison, I think, you can see the number of innovation patents filed has increased largely. And when moving on to the next slide, I think when we talk about innovation, some of the things that we look at is also on the number of unicorns company, right? Because unicorn companies are big startups where they are disrupting the norms and all this. So basically with, unicorns valuing at over $1 billion, I think when we look in terms of countries where we got the most number of unicorns, United States is still leading at 487, but China is just slightly behind at 301. But China is catching up, and definitely we will see more unicorns from China itself. And when we look in terms of the world top unicorn in terms of valuation itself, you probably think the top three companies are from the US, but in fact it's actually not. It's actually from China. Out of the top three sports, the top two, I mean the first and the third is actually from China as well. The first is ByteDance. I think everybody know that company. Most of you have the TikTok app on your phone. Really amazing app. And the second one is SpaceX, which is actually owned by Elon Musk. So you can see where Chinese unicorn companies are basically at today. And moving on to the next slide, I think one thing that I want to kind of highlight is also the IPO market. IPO markets means new entrant to the market, new innovative companies, new companies that are moving into new economy sectors. And when we look at the IPO market, the markets this year has been relatively, on the negative side. But when we look at the IPO market, China is the rosiest market amongst all the other developed nations. And when we look at onshore and offshore as well, which is the Hong Kong side of things, I think the China onshore IPO market is even more resilient and even rosier. And when we look at China onshore IPO application, you can see that a large portion of it is actually in ChiNext, comparing to the other star market as well as the traditional market. So this is where the opportunities are basically. And in the next slide itself, I think one thing that we want to talk about is after innovation is the green movement, the green transition for China. Because China today is basically, unfortunately, still one of the highest the highest pollutant in terms of the CO2 emission. So I think today in this era, China is still relying a lot on the fossil fuel, but moving forward, they have a carbon neutrality goal in 2060. I think that will actually move on to things like your solar, your nuclear, your wind, and your hydro, more on the renewable energy front. So you can see that in 2060 alone, the dynamics, the energy mix will definitely shift, and that is also creating opportunity in the green technology and the green transition area. And one thing is that when we look at solar PV or the photovoltaic, when we look at 2010, China do have a significant market share in terms of your manufacturing capacity in some of the factors here, like the modules, the wafers, and polysilicon. But today, when you look at 2021, China dominate most of it, right? In terms of wafer, it's almost nearly 100%. Polysilicon is actually near to 80%. And so you can see the dominance of the Chinese manufacturing capacity in the solar PV as well. And in terms of the clean energy metal, you look at it like copper, nickel. In terms of the processing, right? China also dominate in the clean energy processing. And this is likely to increase as well, as because the world demand for all these clean energy metals are poised to increase or even double in the sense of lithium, because you have global EV vehicles uptake rising. In Singapore, government is also actually encouraging people to switch to EV vehicles, and that is just not in China or Singapore alone, but it's a global phenomenon, right? And China is already leading in the race for securing and processing all these clean energy metals for the green revolution. So with that, you probably could see also new world power emerging as the demand for clean energy grow. Yeah, and just to touch on the EV sales on the next slide as well, you can see that China is basically have a highest percentage of growth, and on the right side on the battery demand, you can see that from 2015 to 2021, right, you're seeing a huge growth in terms of the battery demand, and China's demand for batteries is also growing in tandem with the global growth, and the trajectory, the exponential curve that you see is actually quite steep as well. So I think that is actually poised to grow in the near future too. And when we look at some of the things is that, China, yes, they have 1.4 billion people, but I think demographically is actually, a graying population. So the demographic advantage that China enjoyed for decades, a young workforce that capitulate China to the world's second largest economy is kind of now diminishing. Sorry. So I think a shrinking workforce does not really gel well for the country's economy. So is China ready for its rapid graying? What are the economic and social consequences? How do you care for hundreds of millions of elderly citizens? And so if you look at it, when in 2060 itself, you will see that the higher portion of the population will most likely be retirees. So what the Chinese government doing is that they have been actually encouraging the market to develop innovative services, create profit incentive to provide quality elderly care. Next is also, cultivate robotic and telecommunication technologies for providing partial care. So for China to be China, it must also take care of its elderly, right? And for China to become a fully modernized country, I think aging population maybe is the number one economic problem that they have to basically solve. And that is actually, reflected in the healthcare expenditure as a share of GDP. If you look at it from 2010 to 2020, it has been on a steady rise. And basically, with a growing population, that definitely the healthcare expenditure will rise as well. And in the next slide, in slide 23, I think what we see is that we have actually done a comparison of healthcare expenditure, per capita. And if you look at it, unfortunately, China is still at the far right. The healthcare expenditure per capita is still at one of the lowest compared to some of the OECD or the developed nations. And given the demographic changes, we believe that they will actually move to the left side of the chart as well, and the expenditure will increase. So with that, I think, it's quite a bit of information, but I think this is the main summary of what the structural developments are in the next decade and how is that going to kind of affect the China's industry. So main thing that we need to take note of is China's 2060 carbon neutrality target. You have your COVID-19 and growing population. So with that, you need innovation to boost productivity and all, and that will actually, increase in terms of your AI, your cloud computing, and then you also have your EV components and all this. So I think that is where China's main growth driver will be in the next decade.
Well, you mentioned a keyword there, innovation, right? And looking forward, that forward-thinking approach. Now, what are some examples, because looking for tangible examples of companies that we can find? And let's look at maybe this index, the ETF. What are some innovative companies you can list for me? And also in terms of performance and valuations, what is the next most attractive thing? What are your views on this? Perhaps Colin?
Yeah, sure. I think thanks, Edward, for talking, bringing up about certain strength of the Chinese innovation. Just for example, we are talking about EV and EV supply chain, including EV batteries. The key here is that there's a lot of car makers. Okay, maybe just reset a bit. The growth here for the EV space are likely to grow, as what Edward had shown earlier, fairly strong. We are talking about at least 30% CAGR, over per annum over the next 10 years. And this is even despite what is going on the global economic outlook, because we are talking about innovation, a transition technology. It's just like if you can recall back, when those days, for some of us, we used the feature phones of Nokia, Sony Ericsson. Suddenly when Apple and the Samsung smartphones comes in, there is this transition because there's this replacement of smartphones taking over feature phones. Right now we are seeing almost the same thing, but with electric vehicle taking over combustion engine vehicles, the traditional vehicles that we have for so many years. In this aspect, what happens here was thankful to the vision of the Chinese leader, which they have actually put substantial investment over the last couple of years. And right now China is really leading in terms of EVs and all its whole EV supply chain. Okay, the unfortunate part is that if you talk about EVs, the car makers, most of them are still fairly unprofitable. You are still buying the future. And unfortunately, in this market environment, I think investors also want cash flow, profits. And that's why we have to look at EV batteries, and all those materials in the supply chain. Just for example, is that, the case here is that the EV supply chain, China really dominates. So as far as we know is that, if it's based on industrial capability, China basically just dominate in terms of scale and cost competitiveness. And, even when US try to get their act together, the point is that right now, US and Europe are just fallen behind this strategic industrial sector, and they need a lot of catching up to do. Even when US introduced the recent US Inflation Reduction Act, also focusing on EV cars and EV supply chain. The fact is that one of the top index, top index constituents in this ChiNext Index is actually CATL, which is the leading EV battery manufacturer that basically manufacture your lithium-ion battery for EVs, as well as they are also doing all this energy storage system, transition system. And the fact is that CATL is profitable, and it is actually holding the largest global market share in the world. So in that sense, we are pretty confident that once China has this lead, they will continue to make sure that the lead they can hold on to maintain their lead, as we saw in what they have done with the solar cells. If you look at the next slide, on the next name is actually Myray, Shenzhen Myray Medical. Is actually a provider of medical equipment manufacturer, and this is basically on a global basis. And what happens here is that alongside with all this aging population that Edward has highlighted earlier on, is that this company has uniquely positioned itself as a global medical equipment supplier. And unlike the drug manufacturer, they had to go through some regulatory, like FDA approval. Equipment approval are less stringent. So meaning that that is able for this company like Shenzhen Myray to able to break through a lot of markets. Again, as I highlighted, Chinese manufacturer can do it with scale and at cost competitiveness. So if I'm a buyer, I will always choose with quality, and again here with price, value in terms of price. So this is just not the only two stocks, but the other industries will include like green energy, like biotechnology, robotics, AI, cloud computing, or even advanced semiconductors to be listed in the ChiNext Index. I just felt that going forward, the key here is that China innovation is actually gaining a lot of global recognition. And therefore, this is just to name a few, like CATL, Shenzhen Myray are just a few of these companies. Thanks.
So that was very comprehensive there. Now, before we go on to, why this particular ETF, I would like to start with our first giveaway. So to the audience there, you are coming in with your questions, very strong questions, I see. And I've already picked out a few, and I'll ask them to our experts later on towards the end. But keep them coming, because we'll reward you with some points in our Moomoo app, but they've got to be in app and for people living in Singapore. But thank you for all the questions. Now for the first giveaway, are you ready? Now here's how it works. You'll have to be the fastest fingers first, and you'll have to get it right, okay? So if you've been paying attention to both our guest speakers, Edward and Colin, just now, you should be able to answer this one. Are you ready? Type in yes. Type in yes. Are you ready for the first question? Okay, perfect. So I'll count to 3 and you'll have to type in your answer. The first question is in 3, 2, 1. What are the number of holdings for the ChiNext Index? A, 100, B, 200, or C, 50? What are the number of holdings for the ChiNext Index? A, 100, B, 200, or C, 50? Do we have an answer? Okay, all of you are really fast. Okay, amazing. Congratulations to the winner. Wow, you guys are quick. So the correct answer is A. So if you got that right and you got the fastest fingers first, the team will contact you shortly. Okay, so gentlemen, I would like to know for the last question for our fireside chat before we go on to the live Q&A and your options demonstration, why UOB AM ping and the ChiNext Index ETF?
Okay.
Could you just tell me a bit more about that? Because we're getting a lot of questions about that.
Yeah, okay. I think that's a fantastic question. So in slide 32, why UOB ping on ChiNext ETF? Basically, just want to let everybody know that this is the ETF that is the first, sorry, basically the first ETF to be launched under the MOU between the Shenzhen Stock Exchange as well as SGX to to basically provide a unique opportunity for domestic investors in Singapore to actually reap the rewards of investing into the future of China's innovation. So moving on to the next slide, you will see that there's a Ping An name inside this ETF. So basically, why is there a Ping An name, right? So I think thing is that UOB AM has a joint venture with Ping An Fund Management in 2021. And when we expanded in China to capitalize on China's basically long-term economic and financial market growth potential. One thing is that when you hear about Ping An name, I think that's a very credible name. People knows about it. And today, Ping An has actually an AUM of roughly renminbi 800 billion under their wing, and they are also, they are also the sub manager for many of our China strategies that we carry today. Now, this setup is also UOB's AM a competitive advantage. We are able to fully leverage on the onshore domestic investment capabilities and local expertise via a mainland Chinese reputable fund manager to offer investors outside China direct access to the country onshore investment opportunity. Now, that also set us apart from others who instead have offshore capabilities based in Hong Kong. And if you know some of the global investment managers out there, when they actually invest into China, they actually manage it offshore. But for us, we have the onshore, on the ground expertise and presence, where in China, the works of doing business is a bit more on the quantity side. Yeah. So with that, I think in the next slide itself, Ping An, they have an equity research team in terms of the mega trends that we have actually kind of mentioned about, in terms of like TMT, your big consumption, your advanced manufacturing, as well as technology and micro cycle areas as well. So they have a very comprehensive analyst and fund managers that's looking into all these mega trends in the China as well. So, and of course, in the next slide itself, basically these are, just to put it simply, is that why UOB AM Ping An ChiNext ETF basically is for simplicity and accessibility. When we talk about accessibility, I think today we are giving you the access, to kind of invest in the ChiNext market, which is mostly less accessible for foreign retail investors. The more for their domestic the Chinese retail investors, or not even for the foreign institutional investors. So today, even if you have a global portfolio, equity portfolio, you can actually use these ETF to gain exposure into the China's onshore equity market and also participate in the mega trends of China's development. And and as well, being Singaporean investors, is actually available in SGD. So, and it's listed on SGX as well. And the good thing is that, after the listing, SRS option is also available. So clients who are actually looking to, kind of grow their retirement fund, basically using SRS, they can actually do so because it's more on the long-term structural growth. And lastly, this is an EIP product. Basically, EIP means retail friendly. You have some of the ChiNext ETF out there in the market. A lot of them are on the SIP scheme, but because they're more for the sophisticated investors. Some of them are synthetic replication, but for us over here, it is retail friendly. It's a physical replication. Yeah. So with that, I think these are the key features of UOB AM Ping An ChiNext ETF, and these are some of the characteristics of the ETF itself. In the next slide. So and currently right now is the IOP period. So basically subscribe through Mumu, which is our partner in this ETF IOP. Thank you.
Thank you, Edward. Now, Colin, do you have any last words before we go on to the demo and the live Q&A?
No, I'm pretty all right with the flow. I think Edward has been doing a good job in terms of trying to highlight what are the advantages of this fund. I think investors have to look at it with a bit longer term perspective. I think going into this year, things, the global environment has been pretty tough. And not only we have a war in Europe, we also have high interest rate, we have an inflation problem. And then now with this tech war between geopolitical tech war between US, China, I think investors are a bit nervous. I think what we saw over the week also was that a huge sell-off in Hong Kong stocks. But just want to highlight here is that the Chinese stocks listed on mainland China is a bit more well-behaved, more reserved. I think the sell-off didn't really affect them as much. They were just down 1 to 2%, unlike what we saw in Hong Kong. The fact is that I think in terms of valuation, what we're seeing now is that the Chinese valuation are looking a lot more palatable right now. We believe that it's actually fairly attractive, on all the various traditional valuation yardstick. But however, I think the market just need a catalyst. I think unfortunately during the MPC meeting over last week, haven't had that catalyst coming in. But when a catalyst comes in, I think in my mind there's actually two potential catalysts. One is this zero COVID stance that China take. I think ultimately, all this top leadership in China will realize that it's at a cost to the economy. And as long as WHO give a green light, I'm sure China will reverse that stand. And secondly, we have to basically also monitor what's going on in the tech space, talk to businesses in China as well. We believe that a lot more localization of the tech space in China is going to go in a very fast pace over the next 2 years, and basically, as soon as they get themselves self-reliant on the technology supply chain, then they would not need to rely on advanced chips from the US, and that certainly will provide this strong boost to the stock market.
Absolutely. Well, thank you, Edward, and thank you, Colin, for sharing insights today. We'll be back with you shortly for the live Q&A. Can I please now invite Lee Yongshern back into the room?
Hi, Olivia.
Hi,
Yongshern. Hello, everyone.
To the audience watching, you've heard the analysis, and of course, very comprehensive. I hope you were taking notes for yourself as well, and you've learned some fresh insights from today. But how exactly can you apply what you learned and get access to the ETF? Now, Yongshern, what can they expect from your demo, and what can they learn as a key takeaway?
Well, it was very informative. Yeah, indeed, I have taken down a lot of notes, and it is also, I think, it's quite interesting given that the market has been under the sell-off for quite some time, be it the international market, be it the China market. But with ChiNext, we have seen some counters which are very popular. I think Colin have mentioned before, Myri, CatL, all these counters are very interesting. But to access this, to read more about the information, I believe all of you, I think given that we only have 1 hour or 1 hour plus to show you all this information, and we have a lot more to share. But where can you get this information? I think there are various channels. You can drop us an email if you want. But if you want to find out more through our platform, then I think you should stay tuned and also log into the Moo app together with me.
All right. Yeah. So I'm excited to see what you're about to share. The floor is yours, Yongshern.
Thank you, Olivia. So please allow me to share my screen. So yeah, maybe I'll wait for everyone, for those who want to follow me, for those who want to look at my screens, look at what am I seeing right now. Yeah, that's a screen. Momo, this is just for information. This is your Momo iPad version or Android tablet version. But for those who are using iPhone or Android phones, don't worry, the interface is about the same. So right now, this is my main watch list page. So if you want to subscribe this ETF, you can, I believe you can see some of the campaigns throughout the platform. You can go to news. So you can go to ETF. You'll see a lot of ETF news. It's UOB AM ChiNext Index ETF under our news tab. And we have a lot of analysis for you and a lot of breakdown. See, these are the top 10 constituents. And CatL, they are supplying battery supplier for several major automotive players in the market, and also industry allocation is diversified, and a lot more information. So yeah, just feel free to visit our website, or even if you want to link to UOB AM website, feel free to click here. Then you will be directed to UOB AM to find out even more. So back to news. So how to subscribe? Where to see the event? For myself, this is a path that I used to go. I go to trade and go to ETF. You see this $500 is flashing. Okay, go to ETF and you can go to Singapore, because this ETF, just to remind you, this ETF is listed on Singapore Exchange. No time zone difference. The Singapore Asian hours. Don't need to stay overnight to look at the ETF price movement right that's listed. So under Singapore, you can see the advertisement is here for the subscription rewards. This is the place for you to subscribe. Click subscribe. Just for information, this subscription will be open until 7th of November, 10 a.m. morning. So here's the place. Minimum size is 1,000. If you want to look at the prospectus, you can click on prospectus and click on request. So yeah, you can click full. So the system will calculate the maximum amount you can purchase. And then click OK, acknowledge it. Click on subscribe. Just for information, this subscription will be just for demonstration purposes. I won't be putting into real subscriptions. Please also do an analysis before you subscribe. We have a lot of information, including these. You can replay this webinar if you miss out any part of it. So this is about the ETF. And yeah, for those who are looking to do some tasks over here to get some rewards, because in conjunction with this ETF launch, we also have some campaigns in this reward page under the tasks. Just give me a second, let me clear this. So this is a task center. You can look for tasks that so yeah, this is a task center. If you want to find out more, you want to understand how the system works, or in case you miss my platform tutorial, feel free to let us know through the comments, or you can contact our customer service 24 hours. You can through the phone number and 24 hours live chat service. All right, I think that's about it from me. So back to you, Olivia. Thank you.
Thank you, Yongshen. I know we don't have so much time because, we're going to go into the Q&A, but if you were to just to sum up the applying process of what they have learned today, how would you sum it up in terms of getting access to this particular ETF on the Moomoo app? Yongshen?
Hey, yeah, Olivia, sorry. Yeah.
How would you say, why would you say this is important for the audience watching to get access to this ETF on the Moomoo app particularly?
Sorry, just now the line was cutting off. Do you mind to repeat again?
No problem.
Apologies.
Yeah. So I think just to sum up, because we've had such a short time, right, to cover just the demo, and there's so many comprehensive tools on there for people to access. So if you were to just sum up in just one sentence, why is it important for them to apply what they learned previously to get access to this ETF on the Moomoo app?
I think that's simple because sometimes opportunity comes when there are good products. We don't know where's the bottom market, of course, but when there's a good product, diversified product, and you're confident, you have expectation that China will start. I mean, will continue its growth path, and the next maybe 5 years or even 20 years. Have you all seen that 2049? I think you have watched it on Bloomberg, on Moomoo platform. This number is keep appearing on the screen. So I think turn this news into action after you did your analysis. I think it should be a place. Moomoo is the place for you to subscribe. And ETF is a product where it is suitable for long-term investments if you are looking at the long-term horizon.
And even Colin mentioned at the beginning, this defining factor of uncertainty in the markets right now. Now, how can they use this as a tool for themselves during, these inflationary times or uncertainty in general?
I believe because of this ETF and Moomoo, we offer very affordable commission. I'm not trying to hard sell the platform, but just telling you that DCA, dollar cost averaging, making it very easy for investors, even if you feel like maybe you're putting in 50% of your investable amount to this ETF and you intend to have another spare fund in case the price hit your target price, like say increase by 10%, you want to buy even more. So we offer very affordable rate for you to do DCA nowadays with, because everything is through online. It's very accessible.
Right. Thank you, Yongshen, for sharing your thoughts and insight. Now, we'll be back with the three gentlemen shortly, but now for the second quiz giveaway for today. And I hope you're listening again to whatever that was shared. Are you ready? Type in yes in the chat box. So many fast fingers. All right, so on the count of three, I'm going to read out the question. I'm going to have three different answers, and you'll have to guess the first answer correct, okay? And the person who wins it has to be living in Singapore and a Moomoo user. Are you ready? In 3, 2, 1. How many number of top 100 science and technology 2022 clusters does China have? A, 62, B, 21, or C, 30? What do you think? Let's see who has been paying attention. Just going to repeat it once more so that we can just get people excited, especially those who just joined in. How many number of top 100 science and technology 2022 clusters does China have? A, 62, B, 21, or C, 30? Excellent. We've got so many people. It's so hard to see who's the winner because everyone's just typing at the same time. Okay, our team has picked out a winner. Congratulations to the person who answered the correct answer. And if you're curious to know, the correct answer was B, 21. Congratulations. Okay, now for the live Q&A, I've picked up my top 5 questions. Can I please invite the 3 gentlemen back into the room? Welcome back. Welcome back. Okay, so now for the most exciting part, and that's why we're here in this discussion, right? For everyone watching, you know that we do these live shows, not one-way conversation. It's always two-way, and we're always looking to find out what you want to know from our experts. So for the first question, I'm just going to throw it to the floor for you, okay? Will the geopolitical tension and rising USD interest rates affect the earnings of the ETF in the short term? And are there any hedge tools for these risks? Anyone?
I think I will go first. So I think I'll answer the last part because that really I think I really like the question. How do we hedge the position? Yes. Some of the people may say you want to hedge using US ETF. You want to hedge using an inverse ETF. But to me, hedging or not, what is the best hedge against a downturn is always, I think I have said this in other webinars as well, always keep some money in your banks for the rainy days, and those excess amount are used for investment. I mean, if you, in case you have a lot more excess funds in your bank or anywhere, you can make it into an investment. So making investment a better journey. But just in case, in the event when you do hedging, of course, there are a lot of products on the XGX, be it we can hedge market risk as a whole in case there's a recession. But generally, we are seeing the policy deviation between the US and China. So China is currently cutting rate, whereas US Federal Reserve is increasing its the interest rate. So we see a divergence in the policy. But of course, if we talk about pro-growth policy, just from the interest rate perspective, China is there, and US may be a bit far away based on the current policy direction that we can see. So I would say when recession comes, definitely the other markets will be affected because generally currently US still one of the in the stock market is one of the key driver. So how to hedge it? I personally believe that you can don't really go to the market and short something directly because you are exposing yourself to some risk when things go up because there's no shilling when price going up. So I personally would go for those slightly more complicated product like DLC or even some warrants or even some put options in the US market if you want to.
Mm-hmm.
Yeah.
Sharing that. Now, anyone else would like to add on to what Yong shared?
Maybe just to add on, Oliver, is that what Yong Seng has highlighted earlier on is that I think we are talking about higher global interest rates, in US, in Europe, primarily because that they are facing higher inflation and they need higher interest rate to contain the inflation in those parts of the world.
Mm-hmm.
But what we are seeing right now in China is that, inflation wasn't a problem. It's just 2.5%, last count. And that, and therefore, what the Chinese central bank has done was to able to reduce interest rates twice, year to date. But I think going forward, as US interest rates go higher, I believe that what China can do is at least to maintain interest rate at the current level. I don't think that the Chinese government or Chinese central bank will reduce interest rates any further because they need to preserve the strength of their currency as well. In terms of profitability, I would say that the market, the addressable market, it has to be also industry specific. But I would say that in general, the addressable market for some of these Chinese innovative companies is that the market for China itself is very, very big. And the point is that, as I also highlighted earlier, is that some of these companies can able to still export overseas. The fact is that because they can do it with scale and very cost competitive. So meaning that, at the end of the day, if you have to buy batteries from China or from US, you can do the sums. Why should I buy, at much more expensive price when they can basically produce or achieve the same objective? So, just for, for our, audience is that I think, what we are seeing is that I think previously in terms of quality of Chinese products, we were talking about 10, 15 years ago, there's still this perception that Chinese goods in terms of quality, they're still lacking, but actually over the last 5 years, what we are seeing is that, in terms of innovation, like Huawei, for example, they come up with the first 5G telecom equipment, which are a lot cheaper than the other manufacturers like, Ericsson or Nokia, for example. And that makes, investing into all this Chinese equipment a lot cheaper. I think it's the same now. They are into EVs, for example, into solar cells, for example. And solar cells, for example, if we are talking about transition into green economy, this growth will be secular in nature. And I think what Edward have earlier shown, if you look at all the solar cells, they basically corner the whole market. You want to buy solar panels, you have to buy from China, and they do it with scale and cheap. If you talk about wind energy, China did all this, in order for the wind turbine to operate, you need the battery system, as well as you need, what we term as industrial magnets, that basically you need China rare earth to do it. And again, here, China produced almost 90% of the global supply of rare earth, to able to make all this magnets. So I say all in all, I think there's certain competitive advantage, although what we are seeing right now is a bit of, some geopolitical influence, and we therefore have to basically understand the industry and do your basically your fundamental research. Thanks.
Thank you for that. Now, the second
Maybe-
question, and for those people who have asked the questions, our team will be contacting you because you received some points for us. So thank you for these really, really good questions. Now, for the second question, someone would like to know in this particular ETF, or just your expert analysis, which sector or industry do you favor the most in China at the moment?
I think maybe let me just go ahead with this first. So I think some of the areas that the sectors that we will kind of like is that your high-end manufacturing, or even the advanced technology sector, the areas in terms of driving the innovation, giving where the geopolitical, the external macro environment are. China really need to be relying on themselves for innovation areas. So it's more like the situation right now in China, in the world, that is kind of cornering China into an area that they need to actually kind of survive. So with that kind of need for survival, they probably have to rely a lot on their own domestic potential as well, in terms of innovation, as well as some of the things that I've highlighted in the mega trends is on the green technology area, given that they have carbon neutrality to 2060, and also on the healthcare sector. And then basically that is what is reflected in the ChiNext Index sector allocation as well. So all these are actually poised for policy tailwinds as well, and also right on the mega trends of where the China's next development phases. So basically, China is in this economic growth transition. Yeah.
Right. Thank you for answering that. For the next question, UOB AM Ping An ChiNext ETF is investors, or if not all, funds into the Ping An ChiNext ETF. So any data about the ETF's performance to date, and what should I do with any risks involved with this? Good question. Thank you. Anyone? Perhaps.
Do you have the data?
Okay, I think in terms of what we can say is that in terms of the ChiNext Index itself alone, because this is actually a physical replication of the index itself. The index has been actually, in the recent year to date, the performance has been, in tandem with where the global markets are, where it has been actually been in the negative range. But I think that's also because due to what's happening globally as well. So the Chinese market has been also impacted. Like what Colin said just now, if we look in terms of the performance and as well as the valuation, traditional valuation yardstick, right? I think, the Chinese market is actually trading at one standard deviation below the 5-year mean. And when we look at some of the larger index, which is your CSI 300 index, basically the largest 300 China A companies in both Shenzhen and Shanghai itself, the valuation patterns are kind of similar to the ChiNext Index as well. So with that, of course, if you look at it, when you expand it through the horizon for a couple of for like 5-6 years and 7 years and onwards, I think you can see a clear uptrend on the ChiNext Index. Yeah.
Maybe Edward, what is the size of the Ping An ChiNext ETF in terms of AUM? I think that easier to explain.
Absolutely.
Because it's a replication of the index itself, the ChiNext Index. So, maybe if they have any data on that, it would be easier to explain to our viewers.
Yeah, so let me just kind of pull that data out. Just give me one moment.
Yeah, because in all ETF, you need to have the scale. Otherwise, in terms of the costs, will not be very cost efficient. So what we are thinking is that, okay, if our Ping An ETF already have the size and scale, and then what we do is that we invest in their fund, and basically, I think in terms of the fees are all very competitive in that sense.
Yeah, I think for that, right now on hand, I don't have the information, but I think I can actually get back to Mumu, and then you can actually help to disseminate to your clients out there.
Absolutely, of course. And of this information as well, maybe Yongchun, you can just add on the Mumu app. They do have details and updates, live updates on the Mumu app related to this particular ETF. Is that right?
Yes, we will have this ETF updates from time to time. Of course, even after the listing phase, we will continue to update the data. And in fact, for those, maybe you just want to get a view of how the price movement of this ETF, the underlying, because at the end, ultimately, it tracks the ChiNext Index in terms of movement.
Right.
All right. So when it comes to tracking, we also provide, I think, the indexes. For those who are holding your phone, want to find out, maybe you can go to the search icon and enter 399-102. 399-102. That's ChiNext Index. So you can see overall the movement in the past 10 years, about 10 years, because it was launched about 12 years ago, 2010. And you can see that like what Edward and Colin have shared earlier, basically, if you look at the long-term chart, it's still an uptrend, but you can zoom in closer to maybe in the monthly or quarterly chart that we are still seeing, because currently myself, I'm looking at 1 quarter chart. For those who are still following me, it is still, it's at the middle. It's at the middle. The bottom, based on the data that I am seeing, is 575. That's the bottom, and the peak was about 4,449. So we are somewhere in between. I think it's in the center. But do take note that 10 years ago, the counters, the EV hasn't take off. Nowadays, with a lot more industry, more game-changing industry within this ETF, this is reflecting maybe in terms of potential that has changed since 10 years ago, even 7-8 years ago, because we are seeing a huge transformation in terms of the EV adoption in the Chinese market, and also with all this kind of recently the policy in the US, the ban of export of the chips, So with this, I think will spur the local economy in the long run, because the at the end of the day, the country still need to sustain, still need to have to manufacture their own electronic products for the global and local market.
Thank you, Yongshern, and thank you as well, Edward, for sharing, and Colin, yourself. Next two questions, and I think these questions are related to your presentation, but also they want to look at, managing risk in general. For question 4, thank you to the audience for this question. If you were to compare the S&P 500 index to the UOB AM Ping An ChiNext Index, what would you think in terms of your outlook is a better return for the long run, and also possibly a lower PE ratio? Perhaps Edward, you would like, or Colin, yourself?
The ChiNext ETF is, I think, in terms of PE valuation, is slightly higher at 30 times. It used to trade even a lot higher, I think past few years. But the fact is, I think the market right now, in fact, if you look at the chart of the the ChiNext ETF market, the ChiNext ETF market is that it has actually consolidated for a long period of time. So we are introducing a product not at the peak of the price, but actually at very attractive valuation. As I also highlighted on the onset of this presentation, the point here is that if you compare against US, right now, of course, the expectation is that there's still a lot of movement towards US dollar assets because of the perceived so-called safety. Even the gold prices also have fallen, with respect to the US dollar. But what happens here is that we have to be very mindful here is that I think US corporates are basically showing sign of corporate weakness, corporate earnings weakness, going ahead. Because you must understand is that, as the economy cycle is going, at least for the next 2 to 3 quarters, we're going to see, certainly corporate profitability, in terms of earnings revision downwards are probably higher in the US market than compare with the China market, because China market has been down last year, has been down this year. I think in terms of expectations are not as high. And as I highlighted, there are certain competitive advantages for some of these Chinese companies or Chinese innovative companies, businesses that were able to still continue to carry on with this secular trend. But unfortunately, I think investors have to be just very mindful of that.
Anyone
Thanks.
else would like to add anything to that? Thank you, Colin.
I think one thing is maybe I would like to add is maybe on the diversification front, right? When you talk about ChiNext Index and basically, compared to the S&P 500, is that, there is a correlation between these two, right? So I think if you look at ChiNext Index into the S&P 500, the correlation is at about 0.4. So basically, a perfect positive correlation means the correlation coefficient is actually exactly a 1, but of course it's a 0.4. So the correlation is actually much lower. So I think with that, it actually gives that kind of diversification. So I would say, in your portfolio, it would be good to have a different kind of exposures. Basically, your S&P 500 gives different kind of market exposures and opportunity, but the ChiNext itself also give certain kind of exposure as well as opportunity. So with that, if you are going to have a global portfolio, I think this will actually complement the portfolio as a whole. Yeah.
Thank you for that. Now, Yongshern, you look like you were going to say something.
Yes, I have been waiting for this moment. Right. So to me, if we were to compare S&P 500 and this ChiNext, I believe it's maybe it's a different playing field, because S&P has maybe more on the big tech firms, which everyone maybe I would say on the street, if you ask, I think a lot of people who are investing, they may be already has these holdings on the portfolio. But for ChiNext, it's something that is not easily accessible by foreign investors. Those individual counters, because traditionally it is only limited to the mainland investors and also some foreign institutional investors. But right now, with this opportunity in Singapore, we can access to this ETF. I think it's like what I would like to repeat what Albert have mentioned earlier. So it's for those who are holding a global portfolio, maybe it's worth to look at this as part of your diversification strategy. And besides that, because if you have a huge concentration your portfolio in certain market, you're also subject to risk in the long run, because sometimes the currency rate against Sing dollar or bit against other currencies is quite volatile. So in terms of diversification, not only to the company itself, but also in terms of currencies, because you're exposing to a local or even Asian currency pairs, rather than all of your eggs are under this S&P 500, which is denominated in US dollar.
Absolutely. And during these times of inflation, a lot of people have been just discussing, cash or, currencies in general, and just many, many different factors that come into it. And yeah, thank you for bringing those important points up. Now, for the last question, also to the floor, managing risks. So where do you see are the key risks in China's growth, and how long do you think that will persist? So in terms of my investment strategy, what do you, I wouldn't say recommend, but what would you say is the outlook going forward to hedge for these times?
Yeah, maybe I'll go first. So I think some of the things that what we see in terms of the challenges that the Chinese market face, they will persist for some time in the near short term, definitely. With what the US is actually doing, what Colin has actually mentioned, some of the domestic challenges. But I think in terms of investing into the future, you're looking at the long-term approach. One of the things that I will probably also highlight is that what Yong-Shen has just now mentioned is basically your dollar cost averaging. And it's also about not the timing of the market, but it's how invested in the market, how long you have invested in the market. That is also actually important, right? So I think those are the keys that you have to take notice of, But the structural opportunity that the Chinese economy is going to, it is evident that it's moving towards there. So you can really see the opportunities and the movement. So you have to, one thing is that today you are participating. Today you have that opportunity to participate in that. You wouldn't want to be trying to chase the market when markets are turning as well. So to me, today the market correction has came. Basically we're launching at a dollar with at one of the lowest point in time. So I think from here there's a lot of also a potentially higher upside potential. So I think this is basically what my view is. Yes.
What about the others?
Okay, I just want to probably just highlight the outlook for China. I think at this moment in time is that, we actually had a lot of negative news flow development, for the past, I would say, since last year, since the crackdown on, Alibaba or TT, if you can remember, and this is just, like kind of like 18 months ago, and all this crackdown on real estate properties again, some time ago, as China drive, push for this drive for what we term as common prosperity. I think what happens here right now is that, as the world develops, there's a lot of noises, and I think investors are probably fairly wary. But I just want to highlight here is that China is a growing economic power. Wow, US is on a decline in terms of economic power. So during the MPC meeting last week is that, they actually highlighted they have actually managed to lift another 100 million population out of poverty. This is actually, at the end of the day, if you look at it, this is something that the country has done economically to what we term as serve the needs of the people. I think investors, or audience, you can actually look out, what are the news that are happening globally, but what happens in China is that there's this development, of course, the rivalry between US and China, is your take. But my take is that, given another 3 to 5 years, I think, it is actually fairly inevitable that the Chinese economy will actually achieve certain milestone. And, this is a fight between the two superpowers right now, but a fight in terms of, not in terms of military war, but in terms of what we call technology advances,
Race.
right? The race, if you can manage to do it, with all these so-called sanctions or whatever, if China is able to do it, then kudos to China, then they are, worthy of actually overtaking US in 5 years' time, in terms of economic growth. Of course, if they can't do it and this thing would sanction them, which I think, in all my thinking and analysis here is that as long as you have the talent, which Chinese people have, with a population of 1.4 billion people, there are also many very talented people around. And recently, if you look at the news, a lot of these talented people has actually returned from US and going back to China to serve the country as well. So just think of that. And you need capital, So China government is willing to provide them with capital, while you can look at it is that, the US, all these US big MNCs, if they are losing, they can't sell to China, they are losing in terms of profitability, for example, AMD or NVIDIA, and that will mean that the next year's R&D expenses will be lower. So you just think of that kind of dynamic. But of course, what you need is time, of course. As investors, I will encourage one to hold at least, a view of 2 to 3 years investment horizon. And I'm sure, and we also will monitor this situation very closely and development. The sooner that the Chinese are able to do 5 nanometer technology in terms of advanced chip production, then that basically is, winning the tech war against US. Thanks.
Thank you, Colin. Now for final words from our experts from today, that's all we have for time for questions. Thank you, everyone. We picked out the top 5 questions. And of course, there were many, many more, but I felt those were the best and most relevant for this webinar. Now, for the end of our live show, before we go into our last giveaway, Yongchen, let's start with you. 1 or 2 summary points from today's live show.
Okay, I think the summary is, be it the China growth or be it US growth, pro-growth, is something that you can't miss any of this growth, because at the end of the day, if you want to have, you want to do some diversification, you want to make to invest in more variety of growth, because like Colin and Edward have also mentioned that the growth in US may be limited for the time being based on the current analysis, but in China, the opportunity is still there. Also touch on question 5 a little bit. The final word, sorry, it's a little bit too long, but in terms of risk, the crackdown is a way for them to grow, for the companies to even be more innovative, and without this monopolistic behavior, with more competition, this technology will definitely be better in the coming years. Thank you.
Thank you, Yongchen. Now, Colin, what are 1 or 2 key takeaways for our audience watching before we end the show?
Oh, okay. Thanks.
Before you leave, maybe 1 or 2, key advice for them watching.
I'm not going to hard sell this product, but basically, when we, every crisis will have opportunity, and I'm not advocating to chase a certain sector, certain industries, but in this, in the current economic environment that we're seeing, we actually want to also look at potential opportunity, that, investors, are not buying high. They are buying at a good level in terms of price level, in terms of valuation. And what we need is basically the catalyst to push the market further. And then basically that will mean rewards for yourself, for the investors. The key here is that, we identify China as still an opportunity despite all the negative news flow that we are seeing. Actually, at the back of my mind, sometimes, is how the messaging is, supposed to get along. Unfortunate part is that the Chinese doesn't get that messaging that well for the equity market. Just for example, here is that, could they just say that, we will, we'll adopt our zero COVID policy. Should WTO agree that things are, less risky, we'll certainly leave the COVID restrictions. That kind of messaging will certainly lift the market from what we saw earlier this week. So I'm just saying that, maybe the Chinese may have to improve on that, but I think certainly, at the back of their mind, I'm sure exactly what they want to do in terms of lifting the COVID measures is basically wait for scientific evidence. And in this case, wait for WTO to provide that green light, and I'm sure with that news, that will be a market moving event. You can't catch the market if they just announce that. Thanks.
Thank you so much, Colin. And last but not least, Edward, your key takeaway for the audience.
Yeah, so I think before the key takeaway, I just want to go back to the question of, how big Ping An TF is. Basically, as of June 2022, it's about 370 million renminbi dollars. So just to kind of provide, because I managed to pull out the info, it was somewhere around in my comp. So, okay, I think Colin has said his piece, Yongshen has said his piece, but just for me itself, I think ChiNext Index basically, encompasses a wide range of innovative growth companies and sectors. The main important thing is that, these areas stand in the main direction of the economic development and operation to, of course, ride on the materialization of these mega trends in the future. So the index basically provide an important avenue for implementing the national strategy for independent innovation. I think this is how I would summarize the whole thing. Yeah.
All right. So from UOB AM, we had Edward Pai and Colin Ng, everybody, and Lee Yongshan from Mumu, Singapore. Thank you so much, gentlemen, for joining us today.
Thank you.
Thank you.
So we'll see you for the next show, hopefully.
Thanks. Happy to do it again. Thanks.
Yes.
Thank you.
We benefited so much. So to the audience watching, thanks for joining in the discussion. As usual, these live shows are really a way for you to benefit and educate yourself so that you can empower yourselves with tools to help you make better financial decisions. Now, really, today with the giveaways, I've left the last giveaway till the end. So I hope that you were listening and remember what was being shared by Edward and Colin just now. So for the last giveaway for today, are you ready? Type in yes. In 3, 2, 1. What does the dual circulation strategy consist of? A, internal, B, external, or C, both internal and external circulation? What do you think? It was in the earlier part of the live webinar. Okay, once again, what does the dual circulation strategy consist of? A, internal circulation, B, external circulation, or C, all of the above, both internal and external circulation? So fast. Everyone is so quick. Let's give them just a few more seconds to reply. And excellent, we have a winner. Congratulations, our team will get back to you. All right, thank you so much for participating and for the great questions. It shows that, we've got some people who are real active investors out there, and also people who are always watching out for the future and also being forward thinking in your approach. So thank you so much for that. Okay, so if you really enjoyed the live show for today, today we covered, stepping through to the future of China. If you're looking out for more topics that are similar to this, do check out our social media pages. But before that, if you have more questions, because I still see a lot of questions coming in, do email us at this email right here, and our team will get back to you on any inquiries related to the ETF, the topic, or for our experts, and we'll try our best to reply you as soon as we can. Now, for more shows like this, we have them so regularly that sometimes it's hard to keep up. So do stay tuned for our social media pages, because we got so many live shows next week going forward into the Singapore FinTech Festival as well. We've got upcoming shows for you, crafted for you to be part of the discussion. So stay up to date and scan the QR code for more details. Now, as usual, these webinars are our bridge to the experts for you. So we hope to really connect more with you, and we look forward to the next show. As usual, it is a pleasure to have you with us. We'll see you for the next one. Signing off, I'm Olivia Higgins.
Thanks.